Hey everybody, welcome back to Chipstock Investor. Today we're going to be talking about a top pick that I had in 2024, Lattice Semiconductor. We'll focus on these three key points. Will there be a recovery in 2025 for Lattice, an FPGA pure play? How does Lattice stack up against the competition? And finally, we'll discuss the financials and figure out if this is a best buy in 2025. Here's the stock chart for Lattice since January 2024. Obviously, not a great year last year, down 5% overall. But after the most recent quarter's earnings, they had a little pop back up to $67. The biggest reason that Lattice did not perform well in 2024 was this chart right here. Every end market that is not related to AI or accelerated computing has been in a cyclical decline. Of course, Lattice primarily plays in the auto and industrial space, as well as that cloud and enterprise. Auto and industrial still down in the dumps. Cloud and enterprise just maybe starting to see a beginning of a new growth cycle. CEO Ford Tamer, who came in September of 2024 to Lattice, has called this or coined the term a U-shaped recovery. There's been a mostly flat bottom that's lasted longer than expected, but we're looking for a recovery. Is there going to be a recovery in 2025? But before we continue and talk about this most recent quarter, quick word from the sponsor of today's video, public.com. If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. They even offer some of the highest yields in the industry, like the bond accounts, 6% or higher yield that remains locked in even if the Fed cuts rates. What sets Public apart is how they give you the tools that you need to make informed investment decisions. You know that we're all about that here at Chipstock Investor, the why. Their built-in AI tool called Alpha doesn't just tell you if an asset is moving, it tells you why the asset is moving, so you can understand what's driving your portfolio's performance. Public is FINRA registered, SIPC insured, US-based company with a customer support team that actually cares. Your investments deserve a platform that takes them as seriously as you do. Fund your account in 5 minutes or less at public.com/CSI and get up to $10,000 when you transfer your old portfolio. That's public.com/CSI. First, let's cover the high-level numbers for fiscal year 2024 for Lattice. Revenue for the year came in just over $509 million, down 31% year over year. 67.4% on the gross margin for the year. And that little asterisk you see on the right side of that gross margin, the 68.7, that was for a $7 million one-time spend that related to materials purchased by their assembly and test partners during supply constraints that, due to the current business environment, they're no longer expected to use before expiration. So bummer for them. They spent $7 million on equipment they can't use. Gross margin would have been higher if that hadn't happened. You can see the revenue mix in their end markets, just like we talked about at the beginning. Industrial and automotive make up 46%, comms and computing 45%, and then just that small sliver for consumer. Overall, 2024 was a pretty lousy year for Lattice amongst many other semi companies that supply end markets that are not AI or accelerated compute related. However, there was good news on the earnings call and for the outlook that helped give the stock a little bit of a boost. Total revenues for Lattice have decreased over the last few quarters, and in this most recent quarter, hopefully at the bottom, $117 million. They expect that revenue is going to increase sequentially, and on top of that, get the gross margin back to 69%. So that is definitely good news for shareholders. Here is their Q1 2025 business outlook. They expect between $115 and $125 million. That's about a 2.5% increase sequentially. And that return to gross margins, 69%. As the CEO said, they continue to anticipate a low single-digit revenue growth compared to full year 2024. They expect their operating expenses to be held flat. and Lattice will remain very profitable as it finds its footing during this downturn. Some comments made by CEO Ford Tamer on this U-shaped recovery in 2025. He said many other companies are continuing to guide down, but they're pleased to be guiding their Q1 earnings per share above the current consensus estimate, and they continue to anticipate low single-digit revenue growth compared to the full year for 2024. Expect to be able to execute on their long-term revenue growth target of 15 to 28% in 2026 and beyond. That's great news for Lattice. That brings us to our second point. As the CEO mentioned, where some of their competitors are guiding down, how is Lattice stacking up against the competition? Here's a chart from our friends at FinChat comparing Lattice Semiconductor and FPGA pure play to Intel's Altera and AMD's embedded segment. Intel and its Altera revenue have been dwindling for a while. Note that they're no longer going to be reporting this as a separate line item. Rather, it's going to be in the all other segment, which was down 32% year over year. AMD's embedded segment has declined significantly since the beginning of 2023 and has been really stuck in a rut these last few quarters. So ultimately, this leaves Lattice to take some market share away from these two companies. Also, there's been a ton of rumors about what Intel is going to be doing, what spin-offs they're going to have, or if companies are going to be purchasing parts of their companies, like, for instance, Altera, possibly going to Silver Lake Capital. There could be further opportunity for Lattice to take even more market share. So what can help Lattice take on more market share in the FPGA market? Notice these 5 secular tailwinds that were mentioned on the earnings call. The first, AI. AI is driving shorter system design cycles, and FPGAs are very well positioned to enable functions of change. FPGAs can be reprogrammed, so you don't have to change out the hardware every single time. And with a shorter design cycle, that would be very useful. Second, ASICs, or application-specific integrated circuits, continue to increase, and so more designs towards FPGAs. Third, as we know, the cost of all of these advanced nodes are outrageous, and so using mature process FPGAs can be much more economical. The fourth tailwind, emerging applications like security are requiring more FPGAs. There was a great clip from Lattice's developer conference on this specifically, using FPGAs embedded into the security of devices. And then finally, edge AI requiring contextual intelligence near the sensor. You can think of that like maybe your computer camera recognizing when you show up, when there's a face there. That's an FPGA that can help with that. Along with those tailwinds in the FPGA market, Lattice is just doing better than its peers. This is another reason why there was this little pop in the stock price. They weren't doing as bad as their peers, their competitors, and they're guiding up. So they're encouraged to continue with those design wins in the Nexus and Avant product lines, those tiny FPGAs where they can take more market share from companies like AMD and Intel. Let's finish up with our last key point. Let's talk about the financials. And first, I'll show you the revenue segments and just how hard hit Lattice has been since 2023. Communications and computing revenue in gold, consumer revenue in purple, but that green segment is where we want to focus on because industrial and automotive revenue has been absolutely the hardest hit in Lattice's end markets. So we really hope to see some slow recovery in that area. Here's Lattice's balance sheet. They're well positioned. They paid off their debt in 2022 and now have only cash on the balance, $136 million to use in the future. So what about valuation? And the question, is Lattice a buy in 2025? This is on a forward-looking basis, both forward price to earnings and price to free cash flow. Price to earnings sits around 62x and price to free cash flow around 53x. We're not going to be adding to our Lattice position. We have a full position, or the position that we want in Lattice, but we're content to see what happens in 2025 with the position that we already own. Lattice has a great management team, and it is solidly focused on keeping this business on track, and we like that very much. If everything goes as planned, we hope to see a recovery in their end markets, especially auto and industrial. But until then, Lattice has done a really good job of weathering the storm in a profitable fashion. That's it for this episode of Chipstock Investor. Thanks for watching. Hit the subscribe button, like the video, share with your friends. Don't forget to check out our Semiconductor Insider membership where we can cover everything that we talk about here. Can't make a video about everything, but we do like to keep all of our members updated, including on what we're buying or if we're making any sells. Check it out in the link below for that membership. See y'all again soon at Chipstock Investor.